So in the bear market, which has already happened, now there are only two routes. Route number one, you are already holding some stocks. Now let me ask you, how many of you are already holding some stocks, may I have chance? Which is majority of you. Very good. How many of you do not have any stocks yet? Very good. Only 3 or 4. Very good. Oh, you're hey, y'all. Yeah, it's okay. So majority of you, I'll go through A, and the 3 of you, I'll go through B. Okay? So I cater for all of you, so 100%. Now, most of you, if you are already holding, I need to go through very carefully. So 1.1, if you are holding some stocks, you may see the share price of some stocks decline. And you have no idea why they decline. And because you have no idea, you worry. Worry, Okay, how many of you hold the stocks, your stocks decline one? May I have a chance? Oh, the same group of people. Yeah, so 1.2 is you're not affected, like the 3 of them. You're not affected because you're not holding a stock. So tonight, the most relaxed one, the most calm one are the 3 people. Yeah, but of course, for the 3 people, it's a golden opportunity provided you know what to do. Otherwise, 1 year later, I see you still as 3 hands. So now, now I focus on here. Because the same group of people raise their hands. Now, remember in value investing, our objective is to find a good company first. And buy at what kind of price? Cheap or expensive price? Cheap price. So buy a good company first and buy at cheap price. So once we establish that it's a good company using a VA funnel, we want to calculate this thing called in what value? Intrinsic value. So let's say you calculated a stock, the intrinsic value is $10. Remember, I'm just revising. Then you want to buy the stock. This one you already know. You want to buy a stock, do you want to buy above 10, which is above the intrinsic value, or below 10, below the intrinsic value? Below, yeah. So in other words, if I offer to sell you this stock, which is valued at $10, I offer to sell you 11. Buy or don't buy? Don't buy because it's over value. Now, so bull market, the share price goes up $15. So I offer to sell you this stock at $15. Buy or don't buy? You don't buy because right now the stock is over value. So now the question is, when do you buy? Below value. So when we say below value, it simply means that the share price has to fall below its what? Intrinsic value. So am I right to say that for people who have not studied value investing, if they do not know what's intrinsic value, every day the share price falls, no use? Because they don't know. So to them, it's a problem. Because they couldn't see what we are saying. So bear market means what? Share price mostly up or down? Down. So if we look at one stock specific, and then you establish that this stock is a good stock, intrinsic value is 10, and right now the market is asking you, hey, do you want to buy this stock that's worth 10? Do you want to buy at what price? $6. Theoretically, before you jump inside the swimming pool. Theoretically, buy or don't buy? Buy, you jump. Now we're in this room. The swimming pool is not here yet. That's why you say, oh, buy, very easy. So let's say some of you, you follow the rules and then you buy at 6. Buy at 6, Then the share price dropped to 3. Theoretically, what should you do? Buy more. Yeah, easy to say. Buy more. Now, but most people don't function like what we say. That means, 6 dropped to 3, buy 3. Now, they don't function like what to say because when they buy at 3 and buy at 6 and the share price dropped to 3, what will most people behave? What will they do? They will sell. Now, what trigger off them to go and sell? What are they worried about? They worried that the share price may what? Drop even further. Now, what's the worst case that could happen to a stock if you buy? You drop to what? 0. That's the worst case. Drop to 0, that means you lose 100%, right? Now, so why it shouldn't happen to us? Why it rarely happen to us is before we reach this stage, we have already established that the company is a good company or bad company? Good company. So the company is really good and you have done your homework. Am I right to say that the share price will not go to 0? Yes. Well, but this one you need to convince yourself, right? Yeah, so if you didn't do your homework, then you go and follow some other people shamelessly. So the person can sleep, you cannot sleep. You get what I mean? So the person follow, but you scared because you never do your homework, you just follow shamelessly, right? So today, some of you, I'm quite sure you can buy Cambrax without thinking. Then when the share price drop, you panic, then you go and sell. Now, so in order for you not to be worried, and not to anyhow sell, you must first done your homework and establish that the company is a good company or bad company. Good. So because it's a good company, share price will not drop to zero. So the thing is, you need two assurance. The first assurance is the share price will not drop to zero, so that at night you can sleep peacefully. Second one is, even though it doesn't drop to zero, the share price will go what? Up. So how do we establish that the share price will go up? Now, many years ago, there was one professor, this one I said during the free class, there was a professor called Professor Robert Shiller, which is a famous economist and is currently teaching in Yale University. So years ago, he won a Nobel Prize for establishing that when a company does well, that means make money, eventually the share price will go what? Will go up. So let me repeat one more time. When a company do well, share price will go up. Now conversely is also true. When a company do badly, the share price will also go down. So remember, we must establish that the company is a good company or bad company. Yeah. This is very important. So that share price will not go to zero and you will auto bounce off. Okay, Now, so if the company is really a good company, and if the research are based on what Robert Shiller is really thorough, I'm quite sure it's thorough because he has won the Nobel Prize for it. So share price eventually will bounce back. But during this phase, it's an emotional ride. It's a self-convincing journey. So how do you convince yourself? You have to convince yourself that you are right and the rest are what? Wrong. Because majority are selling and you are what? Buying. Let me do it one more time. You have to convince yourself that you are right and majority are wrong. And one easy way to convince yourself that you are right and the rest are wrong is most people who buy stocks, most people lose money or make money? Lose money. So if you follow most, you also lose money. Right? So in other words, the opposite of them is true. When they sell, you're supposed to buy. So that when they lose money, you don't lose money. Okay, Later I give you more things so that you self-convince. So you must go back home, self-convince that everything is alright.